I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Wednesday, February 10th. I know we did one of these yesterday, but the markets are flying around. The volatility is there, so I want to kind of revisit some of the charts we touched on yesterday, as well as look at a couple other ones that we didn't have time to touch on. So we've got corn, soybeans, wheat, live cattle, and feeder cattle. We will start off looking at March corn. March corn stabilized pretty darn well yesterday despite the bearish USDA report that we got, and that's something that we talked about in yesterday's Tech Talk. Stabilizing fairly well, and the bulls remaining in control so long as they defend technical support, which we outlined in our daily grain express is 536 to 541. That's the line in the sand that the bulls must defend to keep the ball in their court. We closed down below there. There's a little bit of trend line support here, but this puts the ball in the bear camp going into a long weekend. We have President's Day on Monday. Markets are closed, so I wouldn't be surprised to see us get a little bit more long liquidation in this corn market if we're unable to reclaim ground above that 541 area. Now, where does support come in below here? Well, there's really not a whole heck of a lot until you get down closer to that psychologically significant $5 handle. So again, if the bulls are unable to defend this trendline support here, as well as this pocket that we've defined, 536 and 541, wouldn't be surprised to see a potential retest down to $5 here in the next couple of weeks. One thing to keep in mind, and that we're keeping a close eye on going into next week's trade, is options expiration. A lot of times those round numbers like to be a little bit of a magnet to the market, so we're keeping a close eye on that as well. Now moving over to soybeans. Soybeans, we said, wow, what a good trading session we had yesterday. We got out above this consolidation and I guess you could say congestion pocket, and it looked like we were on the road to go retest contract highs. Well, the market had other plans. We reverted and came back into this pocket. This 1350 area, psychologically significant, but as you can see here is technically significant as well. If the bulls are unable to defend this and we see a break and close below here, we wouldn't be surprised to see additional pressure come into the market and take us down towards this $13 handle, which you can see was previous resistance and became support there at the end of January. So that's what we're looking at for beans, and I know we're going fast, but we've got a lot of markets to cover. Wheat, March, talked about this head and shoulders here for a while, bumped up against some trendline resistance here in yesterday's session, and we're able to hold that. And again, as with the corn and the beans, we're right back in this kind of congestion pocket. This 624 to 628 area is a must-hold pocket for the bull camp. We've been leaning on the bearish side, so we're rooting for a breakdown below, but time will tell. If we're not able to break down below, we'll probably start working with clients to reduce some of that short exposure. But a break and close below this support pocket opens the door for some additional pressure to come into the market and potentially take us back down closer to that psychologically significant $6 handle. So that's wheat. Live cattle, we saw a big wide-ranging trade here over the last 2 days. We got within a stone's throw away of 126 yesterday, stone's throw away from about 122 here today. So a $4 range in the last 48 hours as we continue to consolidate a little bit. And this is something we've talked about in the past couple of tech talks, is reducing long exposure against technical resistance. It goes all the way back to these previous contract highs in January 2020. What are we looking for? Well, there's a little bit of support here in 122, give or take, but ideally we want to see a pullback a little closer towards that 120 area where we'd like to reload and look to the long side. And as mentioned in previous tech talks, looking a little further out too in that August contract at 118 and being buyers down to 116 on a healthy correction. If had a good run, pullbacks are healthy. Keep that in mind. Don't let it scare you too much. And as far as the feeder cattle are concerned, surprised they didn't get much more of a bid today with the grains trading like they did, but all in all, we're still just in a little bit of a range, chopping back and forth between this 137 and a quarter area to 140, give or take. And as you can see, it's really right in the middle of the range that we've been in since here in the middle of January to the end of January. We're just lingering right there. Breakout above 140, I think, takes us up towards this 145 area. Breakdown below, there's really not a whole lot of support until that 132 area. So we're watching the top and the low end of these recent ranges here very closely for a bigger directional move in the near future. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. If you have any questions at all, don't hesitate. Give me a call, 312-278-0500. You can also email me, Oliver@bluelinefutures.com. Look forward to hearing from you soon.